This video will demonstrate the employee pay related journal entries every time when there is a payroll. This could be weekly, bi-weekly, semi-monthly, monthly, depending on how often the how often the employer pays the employee. So based on the information below, which is this area right here, okay, this information, create the journal entry needed to record tax liabilities and the payroll distribution to employees. Dream Solar pays its employees bi-weekly and operates in a calendar fiscal year. The following information is information from the payroll accountant for Dream Solar's as of January 28, 2016 payroll. Paychecks will be issued on January 29th. Payroll totals are as follows. So we have information for gross pay, all of the tax liabilities, and then net pay. Remember, gross pay is basically straight across the board, the hours you worked times your hourly rate, or also your salary base, okay, for that biweekly period. Net pay is the amount that you take home. So based on these balances, okay, in each of these accounts, or the amounts that were deducted from the gross pay based on that tax liability, we're going to go ahead and create the journal entry needed for these employee pay related journal entries. First of all, what you want to do is you want to make sure that you debit salaries and wages expense, okay, recording the expense incurred for that payroll period. So in this case, I'm just going to say $20,000 because that is the gross amount that incurred for that payroll period. Next, I'm going to go ahead and list every deduction there is. So for example, we've got federal income tax payable. Okay. Social Security tax payable. Medicare tax payable. State income tax payable. These are actually the names of each account. We've got 401k contribution payable. I'm just going to do this. Health insurance premium, or let's just say health insurance payable. It could be health insurance premium payable, but I'm just going to say health insurance payable. And then United Way payable. Okay, and then finally, my net pay, which is the $15,080, is going to be a credit to salaries and wages payable, putting it into a payable or a liability account to be paid later. So basically what I'm going to do is I'm going to go ahead and just copy and paste all these over here. And I just want to make sure that all of these amounts here equal 20,000 and it does. Okay. So I'm going to go ahead and just say to record payroll as of January 28th. All right. So that's going to be my payroll entry to record gross wages and to record all the liabilities incurred for the January 28th pay period, and also record the net pay. I'm going to go ahead and record the payments to the employees right away, which is going to be a debit to this payable account right here. We initially put it in a payable account, but now we're going to pay it. So we're going to reduce that payable account by $15,080 and simply crediting cash for the same amount. At this point, this is when the payroll accountant is actually writing the check. This is the entry that is being made behind the scenes. Okay. All right, so to sum up, we basically had a gross pay of $20,000. From that gross pay, we had all types of deductions from federal income tax to all the way to United Way contributions. We went ahead and created a journal entry to record all of the tax liabilities that will be distributed at certain dates. And finally, we made the entry to pay or submit payment or salaries to employees. And that is the entry to record employee pay related entries.